Friday. This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee. Let's get started and check for a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at $32,103. Bitcoin is slightly, it's down for the day, about 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, Bitcoin is down, but we've got some positive news for BTC. A key indicator showing capital is beginning to flow back into Bitcoin. This is the stablecoin supply ratio oscillator created by analyst Willy Woo and tracked by blockchain analytics firm Glassnode. It's risen from a 12-month low of negative 2.6 to negative 1.9 in the past 4 weeks. The recovery indicates capital has been flowing from stablecoins into Bitcoin, according to a Glassnode tweet. In other words, bargain hunters look to be using stablecoins to buy the dip in Bitcoin and the broader crypto markets. Stablecoins are cryptocurrencies with values tied to an external reference like the US dollar. Glassnode further explaining that, quote, when the ratio is low, the buying power for Bitcoin is high, as the same amount of US dollars can buy relatively more BTC. Conversely, a high ratio means fiat has weak buying power. And joining me to discuss Bitcoin news and more is CoinDesk Managing Editor of Technology, Christy Harkin in Toronto. Welcome to the show, Christy. It's a girls' Friday afternoon, isn't it?
Woohoo!
All right, so I was talking about BTC price. So let's dive into this a little bit. I mean, Bitcoin has been trading in a range between 30,000 to 40,000. It kind of broke below 30,000 down to the 29 area on Monday. It gave the crypto markets a jitter, and that was after China announced a crackdown on trading, asking financial institutions not to basically fund accounts related to crypto exchanges. And so, but we've seen that recover. We've seen a bit of a bounce back. There's been some institutional potential interest. We hear from Andreessen Horowitz or A16Z. They're raising over $2 billion for its crypto fund 3, and they're hiring an SEC official, Bill Hinman, as an advisory partner. Also, Coinbase is expanding into Japan, yet we are also seeing some headwinds from, for instance, the CEO of Qatar Investment Authority saying that cryptocurrencies still need a bit of maturity before the sovereign wealth fund, and they have $360 billion in assets under management, so they do speak with a bit of command here. They're considering investing in the space, but not until it matures more. And we also heard from legendary investor Jeremy Grantham saying Bitcoin's rally reminds him of the dot-com bubble and recommends that BTC be voided in portfolios. But Christy, I guess what I wanted to talk to you about was El Salvador, and that was the news last night. They have set a date for the Bitcoin law, and that is September 7th. They're going to give everyone $30 in an e-wallet. But I imagine about the technical challenges ahead for them might be quite broad. What can you say perhaps about some of those?
Well, there's a lot there to unpack. And first off, I wanted to also point out that, yes, there's, with the China mining ban and all of these other factors affecting the price going down, there's also a lot to be said, though, for Bitcoin being distributed and how it takes many, many international factors to not just support, but to detract from the Bitcoin price. And having everything concentrated in one spot is not necessarily a good thing, but it's one of the things that Bitcoin has going for it, is that it is such an international well, it's a global currency of sorts. So we're going to see lots of different push and pull factors on it. With El Salvador, what we're seeing is, I mean, it's been making some big news lately because of the whole currency acceptance, and now they're going to be distributing all this Bitcoin to people in the country through these wallets. And the thing that there are a couple of things to think about there. One is the fact that you're dealing with $30 is a lot of money. I think the average monthly salary is like $230. It's not that much. So $30 is worth a lot. So that gives a lot of incentive for people to actually go and open this wallet and figure out how to use it and figure out what to do with this Bitcoin. On the other hand, it's also money that is, I mean, it's taxpayers' money in the first place. So they're getting their own money back.
Do we even know where this money is coming from? This $30? Is it through donations? Is it given by the nation?
Not from what I'm hearing. I'm hearing it's, from what I understand, it's actually like taxpayer money going into this. This is the government giving money out. So that in a way is kind of like weirdly antithetical to Bitcoin in the first place, because Bitcoin is, you know, with the whole libertarian principles, you know, you don't take money from the people in the first place. It's a way of controlling your money. And hey, look, now the government is giving us Bitcoin, which is our money anyway. So there's that. There's also the idea of, in order to open your wallet, in order to claim your wallet, you have to use facial recognition as an identifier. So you're handing over your biometric information in order to get your Bitcoin, which, considering Bitcoin's focus on privacy and self-sovereignty, is also a little out of sync with the ethos of Bitcoin, because you're now handing over your very most personal data to the government in order to get your money from them. So that's a little odd. And then on top of that, you're counting on people understanding how to use this money once they get it, and how to use it in such a way that is going to be efficient. Because Bitcoin on its own, it's easy enough to use once you know what you're doing, but it can also be expensive to use, because the fees associated with Bitcoin, if you're going to trade at course Strike and Lightning, they have set this, Strike has set up ways for people to use the Lightning network. But considering also that part of the problem that they're trying to get around is remittance fees. So sending money from, say, the United States to El Salvador, or Canada to El Salvador, that doesn't necessarily work. I don't think that works yet within Strike. It might, but the point is that in order to do that, if they're going to send it on chain, they have to understand that they can set their fees at a lower rate if they want it to not go, if they're willing to wait a little while. But there's a whole level of education that's going to have to happen in order for the people of El Salvador to actually use this money. So the $30 is a great incentive on the surface, but there are lots of other questions that have to also be answered, and that they might want to be taking a look at.
Right. That's very interesting about the facial recognition feature. I mean, in order to access these e-wallets and to get access to that $30, you have to provide your, biometrics and put your identity and give that to the government, which is very, and another, I suppose, criticism of this bill has been, which was been repeatedly offered, is that it requires you to accept Bitcoin payments if they're offered to you. And from what I understand, the way legal tender works in other countries, you're not forced to accept payments. And so this is perhaps a form of forced tender, which is uncommon. So
I'm not 100% sure about this is not my area of expertise, but I think the point of legal tender is that it needs to be accepted as currency. That's why we have legal tenders, so that people can say, you know, that's what you pay with. That's the accepted form. And if someone hands you a $10 bill, then you have to accept it as payment. You can't say, I don't want that $10 bill. I want something else. And the thing with Bitcoin being legal tender is that means that has to be an accepted method of payment. Which again, yes, that can be a little onerous for somebody accepting it who doesn't have the education yet and doesn't know how to use it and doesn't know how to transfer it into dollars or something usable, doesn't know how to manage fees. So it's assuming a level of sophistication in all the users that may not be there yet. And again, with Bitcoin, it's kind of the point of Bitcoin that it is about freedom and being able to choose the form of money that you want to use. And I don't know that this is what Satoshi would have had in mind in the first place, of being forced to use
And what
Bitcoin. Some
of the proponents of this bill say is that, well, if you do receive Bitcoin, you can immediately transfer it into US dollars, and I suppose that's a feature available on Strike or some of the payments features that they are offering in El Salvador. So we'll see how this develops, obviously, but it's interesting to get the dialogue running in any event.
Sure.
Also, another big event this week was the death of John McAfee, the magnate in crypto software, antivirus software, as well as a crypto evangelist. A very controversial character. He reportedly committed suicide in a Spanish prison in Barcelona when the Spanish High Court ruled that he could be extradited to the United States, and rather than face extradition, he decided to take his own life. Now, people love him because in the crypto community, he embodied all the things that people in crypto love: freedom, living life on your own terms, unabashedly irreverent and honest. But I mean, he was involved in pump and dump schemes, allegedly, as well as initial coin offerings. He allegedly perhaps murdered his neighbor in Belize. Still, that has still been, there are a lot of questions surrounding his behavior. But in the crypto industry, at least, how do you view his legacy, Christy?
I think that he was almost a precursor to what we're seeing right now of the cult of personality that arises around big figures, larger than life figures who get in on crypto. And the thing is that, yeah, he was sort of like one of those early larger than life characters who jumped in, and it made sense. I mean, he was into security, he was into privacy, he was into a lot of and liberty, and he was into a lot of the ethical reasons why a lot of people are interested in Bitcoin in the first place. And then he went a little off the rails, which often happens too. I mean, I'm seeing parallels, even not with the seedy side of his personality, perhaps the allegations of less seemly things. But I've actually been seeing a few echoes of Elon Musk even in here, where he starts pumping, he's all in on Bitcoin and makes his famous wager of what he will do once if Bitcoin doesn't reach a certain level within a certain period of time, which of course didn't happen. But then he got into altcoins and he got into ICOs, and he was promoting things that had not the fundamentals of Bitcoin in any way. And people lost money, and that's because they were following along more with the cult of the personality rather than looking at the actual fundamentals of the coins and the projects that he was pumping. And I think there's a lesson to be learned now from exactly that these are just individuals. These are just people with opinions. They're big, they're loud. They have a history of getting it right in many ways, but also they're fallible, and sometimes they're in a little bit over their heads in terms of what they actually understand and what they know and what they really should be, what kind of influence perhaps they really should be having. And people need to take that step back and think, what is it that I'm actually being sold here?
Well said, Christy. In terms of looking at the week ahead and the markets, well, we're going to see there's an impending unlocking of shares in the Grayscale Bitcoin Trust purchased in January as a source of downside risk to the cryptocurrency markets, according to JP Morgan. Strategist Nicholas Pernagurtoglu, he was writing that selling of GBTC shares exiting the 6-month lockup period during June and July has emerged as an additional headwind for Bitcoin. So I'm hearing from a lot of analysts that we may see some short-term downside, but long-term still very bullish out there. And just a note to viewers, of course, Grayscale is a sister company to CoinDesk. Another headwind we're watching out for is China. They, as I mentioned earlier, they're cracking down, but it seems every year they're banning Bitcoin to some degree. This time they are saying that, they want to limit trading. They want to limit financial institutions funding crypto exchanges. They're also cracking down on China mining. And so we are seeing this great migration. And Christy, I wonder, are things different this time? We are certainly seeing miners leave. Bitmining and Canaan, one of the largest Bitcoin mining machine manufacturers, are opening spaces in Kazakhstan. And there's a report that a Chinese logistics firm is airlifting Bitcoin mining machines to Maryland. So is there teeth to this?
Yeah, there's actually there's a lot of movement happening right now when it comes to Bitcoin mining. And I think it's going to be interesting to see exactly how it shakes out. There's a really interesting article published on Hash Rate Index by Colin Harper that looks at where these miners could go, where they are going, and not just that, but what it will take to actually get it to happen. Because it's one thing to say, oh, they can just move their mining operations to Kazakhstan or to Texas or to Canada. But it's a whole other thing to actually get the equipment there, or to buy it. Are you putting it on a slow ship? How are you getting it to the port in the first place? Remember, a lot of these mining facilities are in remote areas of China, up in the mountains, or, out where nobody else, where there's hydroelectric power that's available to them because there's nobody around. So they are often a lot of them, not all, but a lot of them are out in remote areas. So they have to transport all of their mining equipment, and that is not a light proposition. All their mining equipment, plus the racks that they store them in, and they have to uproot all of that, move it to a new facility. They have to source the power. They have to find the real estate. They have to potentially rebuild or build new racks to put the equipment in. And they want to locate it someplace that is not going to be as regulatorily up in the air as China is right now. So, yes, places like Kazakhstan, places like Russia, they're nice and close. They'd be easy to move to. But once you get there, right, as far as regulation is concerned, they're a little bit dicey too. Yeah, what if they get there and then in 2 years, Russia decides, nope, we're not going to let you mine here either. So they would look for places maybe in the US or Canada where there's a bit more of an openness from regulators, and they're not going to have to worry about that. There's lots of energy available in the United States and Canada, and that's great. But to physically get the equipment there, that's a barrier. To physically build those plants once they get there and have staff to put it together and run it, that's another issue. So logistically, it's going to be tough.
Yeah, unfortunately, we got to wrap it there, but it's going to be very interesting to see how the great Bitcoin migration hashes out.
Indeed.
All right, thank you. Thank you, Christy, for joining me this afternoon. Appreciate you coming on.
Okay, we'll talk to you next week.
That was our CoinDesk Weekend Review guest, Managing Editor of Technology, Christy Harkin. And that's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again on Monday at 3 p.m. Also join me Monday morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.